Thanks so much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the post-election rally and how far some say it could still go. We'll trade it with the investment committee today. Joining me for the hour, Josh Brown, Jason Snipes, Steve Weiss. We're all at Post 9. With the markets a bit in the red today, core PPI was a little hotter. The Fed chair, by the way, speaking this afternoon around 3 o'clock, so we'll cover that live on Closing Bell. Yields are up today. Josh, the major averages since the election, let's just say S&P's up 3.5% in this post-election Trump rally, if you want to call it that. The prevailing thought seems to be that it has more room to go. J.P. Morgan says that today. SocGen says you could get about 6,600, a little bit north of that, possibly sooner than they thought. What does that sound like to you?
I think there's a reason to believe that that's the case. Somebody asked me 2 days ago, if I put a gun to your head, God forbid, gun to your head, you have to pick 10% sell-off between now and year-end or a 10% melt-up. Like, for me, the obvious guess is melt-up. Just understanding what I understand of human nature. A lot of people have been piling into Treasury bond ETFs, record flows for BlackRock's Treasury ETF, State Streets, go on down the list. Obviously, money market funds, I think, are now approaching $7 trillion. You've got people that put this kind of caution into their portfolio going into the election, understandably. We didn't get that chaotic thing that everyone was worried about, and I think that's what you saw take place over the last couple of days. Just people say, okay, we're not going to do things with ballots in the Supreme Court. What can I buy? I think people need to be cautious here, though, because there are a lot of stocks that have already had that melt up. And this is where you use RSI. So I talk about RSI on the show a lot. It's not subjective. It's not my opinion. It's a mathematical calculation that tells you how overbought a stock might be. I'm seeing RSIs in the 70s, in the 80s, and then I'm seeing some big momentum darlings very quickly dropping out. When we look at the best stocks in the market, we have 127 names on the list. That's really high. 2 weeks ago, it was like 50. So a lot of stocks have already done the year-end melt-up. They just pulled it forward.
Let me ask a quick question.
Yeah.
So since you talk about RSI a lot, and you're talking about it now, and you say, well, 70, 80, and that's sort of a screaming, that's a lot.
80s,
What's reasonable? What's reasonable?
So you want to buy things that are crossing into the 60s on their way to the 70s on RSI. There's nothing wrong with buying a stock with an RSI greater than 70, but you're buying definitionally an overbought name. So I want to give you some examples of momentum names that have just fallen out. This is important because this is where you lose money. You buy the top of something after you've just watched it go up 11, 12 days straight, and then people take profits before you even know what hit you. Carvana just came out. MicroStrategy, Robinhood, Marvell, Coinbase. Very, very quickly, these stocks went from being the best stocks in the market to, oh, wait a minute, maybe this is overdone. So I want to tell people, if you're looking for candidates, if you want to take trades, if you want to play a year-end melt-up, don't buy the hottest of the hot stocks because that trade may have already happened. We see this time and again in markets like these. It's really tempting when a stock just continues higher day after day. I think you want to just be a little bit more cautious about your entry if you're playing the top momentum names.
Jake, I mean, you've got firms talking about, as long as the 10-year yield remains under control,
yep,
to them that means under 5%, that you have a scenario in which, as I said earlier, SocGen, 6666 is plausible sooner than later, they suggest. We're at 6,000. I mean, all right, so you're going to go up another 10% minimum, potentially, as long as yields don't get a little out of hand here. What do you think?
I think that 5% marker is very important to bring up. Why? Because the last time the 10-year was at 5%, that was October 2023 when the market was down 6%. The S&P was down 6%. So I think if we stay in a trading range, that's absolutely plausible. The other thing I would say, I think that's a concern for the market is the multiples at close to 23 times, right? So there's a lot of concern about the multiple and why are yields moving up. And I think from my vantage point, it could easily be both. Inflationary concerns and also the market is good. GDP run rate of 3%. I mean, there's a lot of positive things to like. And there's a lot of stocks moving, and I think the everything rally is obviously what's playing out. So I continue to be cautious, but I do think there's continued opportunity here, at least through the end of the year.
Weiss, right now, multiple is 22.1 times. 10-year average is 18.2. So even while firms like Barclays say, well, valuations are elevated, that doesn't mean anything, really. You could still have a melt up into the year end, that it's a real possibility. You have people like Ed Yardeni talking about similar things. I want you to listen to what he told me on Closing Bell yesterday, and we can talk on the other side about expectations, if not great expectations for this market.
I've talked about the possibility of a melt-up scenario. I mean, I keep talking about the roaring 2020s, but I give that a 55% probability. I would say 25% to a melt-up. Too much of a good thing. I think the Fed's making a mistake here, lowering interest rates and stimulating an economy that's already doing quite well, and that could very well spill over into the stock market and create a melt-up.
You think about the idea of melt-up, whether we've got, a certain level of euphoria developing, as Nelson Peltz talked about yesterday. Quote, trees don't grow to the sky, definitely not interrupted. There will be something that will upset it, that being the rally, which he says just can't continue at the current clip, as positive as he is on the outcome of the election and what it's going to mean for the economy and all sorts of other things. What do you think about that?
Yeah, look, like Josh, I do think that if you're going to pick one side of the coin, it's going to be the melt-up, because that's what we've seen. I really tend to look at it a different way. I'm looking at it, what's my risk? And I believe that the cohort that invests in this market has a completely different angle on it and view on markets than what we grew up with even less than a decade ago, meaning that the market's driven by half of every stock is owned by an index fund, right? And then you've got algos that account for a lot of the trading volume. So when it comes to fundamental analysis and valuation, that's actually less important. And if you take a look at the cohort that I'm addressing, you've always had a V-shaped recovery, except for the pandemic, which everybody can explain away. The early part of the pandemic, not the extra part. So as I look at what's the risk being here, despite elevated multiples that aren't wildly elevated, they're not the point where everybody's going in, and saying, oh my God, too high. And Nelson Peltz is right. You can never predict what's going to cause the market to take a real hit. My point is that being invested in this market for the last few years has been the right thing to do, and that shouldn't change. So while I agree with your view, definitely on RSI, I mean, those are just facts, right? It's not what I look at when I'm owning fundamental names, and you're not suggesting that either. It's for trades. So I'm comfortable with my fundamental portfolio, even though I believe that valuation is extended in some names like Microsoft, but it's a moment in time. So if they come down, they will eventually grow back into the valuation.
Can I give you an example of what Steve's talking about? Because I think it's a really important point. There's almost like two different markets right now. Let's put up this company, AppLovin, APP. Nobody I talk to has even heard of this stock. It's up 17% this week. It's up 246% since the spring.
Terra Nova owns it, I think.
Yeah, it's up 574% over the last year. He owns it. It's a momentum name, so it would definitely be. I'm sure it's an amazing company. I don't know that any fundamental change could actually justify what's gone on in a stock like this. The people who are in that stock are not weighing like, oh, should I buy that or Procter & Gamble? That's its own world. It's its own market. And so it becomes really important, even if you think there's a melt-up coming, it becomes really important to know who you are as an investor and know what game you're planning to play.
600% year to date.
Yeah, but if you're long this thing, please, I urge you, sit in front of your screen for 8 hours a day, okay? Most people aren't going to do that. So you have to know who you are, and if you don't, the stock market's a really expensive place to find out.
So you have these other stocks that are on your mind, if not a list of ones that you think could be poised for a breakout. You don't own either of these names, but you've called them to our attention and for our viewers too. T. Rowe,
yeah,
and Old Dominion.
Yeah.
Why so?
Well, these are great setups, and one of the things I try to do on the show, even if I'm not involved in the trade, is just put the spotlight on a stock that you may not have heard of, where something notable is happening with price, and then take a look at the fundamentals and try to understand whether or not that trend has the potential to continue. I want to look at a one-year chart of, let's do Old Dominion, Freight Line, ODFL. This is one of the largest LTL trucking companies in America. That's less than truckload. So they're shipping for everyone, 50 states, 23,000 employees all over the country. This stock has now broken above its spring highs very convincingly with a big gap up. And over the last couple of days, it's been retesting that gap on lighter than typical volume. You have a 50-day crossover above the 200, which signals a momentum shift in the underlying stock. If this retest is successful and it doesn't get back down into the gap, use candlesticks charts for this, there's no reason why this couldn't continue to roll higher. It's in a group of stocks that have been doing well. It's one of the better performers, and it's about to clear that resistance from 6 or 7 months ago. I think it should be on your radar. And if you're shorter to more intermediate term oriented, this is exactly the type of stock that hasn't been discovered yet, but could be discovered if and when it convincingly takes out that April high. Let's do T. Rowe really quickly. This name, more people know what it is. It's an asset manager. The asset management stocks have been on fire all year. This is actually one of the laggards, but now about to break resistance. T. Rowe Price is not just mutual funds. They've made big investments into private credit, private equity. They're involved in crypto. And this stock is clearing 3 years worth of congestion at these levels. It's probably underowned. It's probably cheaper than the group. And again, it's a pending breakout. You can see this right here. Look at that congestion going back to 22. The buyers are taking control of this chart, and I think you want to have it on your radar.
Yeah.
There are setups like this in every sector. I think your starting point as an investor becomes really important to find them.
All right. You know, another stock in the midst of, I think it's fair to call, you want to call it a mini breakout, Jason? Call Amazon.
Yeah.
If you want to. It's the best mega cap
Major
tech
breakout.
name.
Yeah.
Best mega cap tech name. I'm not including Tesla in that. If you want to talk mega cap in general, stocks over $1 trillion in market cap, then Tesla is obviously the best performing one since the election. If you take Tesla out of that mix and you just talk about technology focused names, Amazon's the best since election day. It's up 6.5%. It's a new record high. I know it's down a little bit today. Weiss, you're in the name too, right?
Yep.
What do you think about this breakout that this stock is in the midst of? As you know, Josh just said, I called it a mini breakout. Josh said bona fide breakout.
And Josh had called
Yeah.
it. Josh had called it before, about a month ago or so, or weeks ago, saying it's going to break out. Look, I think it's kind of interesting. I mean, Amazon has been left behind, so to speak, while all the others have moved up, meaning Meta, meaning Apple, until recently. So it's about time it caught up, but it's also fundamentally driven. If you look at what Jassy has done to the company, he's removed the vanity projects. He's focused on EBITDA, so he's focused on profitability, increasing profitability. Of course, they were already profitable. So it's a name that people just have been sort of ignoring for, and I mean, when I say people ignoring, on the margin. You have long-time holders, I'm a long-time holder, and others, but in terms of new money coming into it, it needed to have a story, and the market needed to get comfortable with the story, and that story was Jassy delivering on it.
Jason, I mean, it's up 40% year to date, okay?
Yep.
Is that being appreciated enough?
You know what? I think it's starting to finally. I mean, it's up 14% since the print. You know, very solid sales and EPS growth. You know, listen, last quarter, it seems like it was 2 years ago, but they had a top-line miss, right? That's way, way, way back in the past at this point. AWS operating margins, profits, to Steve's point, were up 50% year over year. So I think, and the other story is this Amazon Haul new business, you know, for products that are $20 or less. I think that's going to be a nice vertical for the company. So
I agree.
I like a lot of things here.
And I think the other part of it is people are looking for legitimate companies that are going to benefit from AI, but haven't had that dialogue, that narrative about the company going. And that's starting to be realized in Amazon. AI, which they've been using for years, and AI has been around for decades, but when you take a look at what it can do, their cloud business, drive more use in the cloud, and they'll develop their own tools eventually.
Well, that's why they have the
Microsoft
investment in Anthropic, right? So
Yeah,
it's been identified. Now maybe they're just starting to get a little more credit for it. To your point, Josh,
so.
price target today, Needham 250 from 210. So the streak continues to chase a lot of these names higher, but that would be a touch less than 20% upside from here.
I know it went up a lot. I know it went up a lot already, but if you pull the lens back and look at the last 5 years, the stock spent a lot of time doing nothing. Andy Jassy spent his first year kind of cleaning up the excesses of the pandemic era. They hired too many people. They tried to do too many things at once. So that was year one. Year two was just pure defense. Just like, and then year three was, oh no, we can't get left behind in AI. Okay, fine. Now we're in a different era. We haven't seen Amazon playing offense, like visibly playing offense, in a long time, and people forget when this thing gets on its horse, what could happen. Just consider the blitz of headlines. In the last 48 hours, they just launched a telehealth business. Amazon is going to come out with a low-cost, upfront pricing clinical visit that you do online. They have the potential to put this in front of more potential users than all of the other publicly traded telehealth companies around the world combined. And they can bundle that with free medication delivery through Prime. If you're already paying for Prime, why and you need prescriptions from their prescription business, why wouldn't you also do your telehealth visits that way for new scripts? Of course you would. They're going to do it better than anyone else. They're going to be dominant. That's Amazon on offense. Number two, the Temu competitor, Amazon Haul. Inexplicably, there's an audience for $5 junk from China, and it seems to be a big one. My son's in that category. I don't know what he's buying or what they're sending. I don't want any more Temu deliveries. Amazon just launched this thing based out of Seattle. They're going to go slow, but ultimately, this could be a brand new vertical, to Jason's point, that nobody was really counting on them playing in, and they're actually going to charge you for deliveries for anything under $25. Last, Trainium 2 chips are Amazon's answer to the conundrum. All of these AI workloads, it's too expensive and too cumbersome for the NVIDIA GPUs. There's got to be something in between that's more customized to the AWS user and that we can make some more money using. So you're going to see a ubiquity of Amazon chips, Trainium 2 chips, in all AWS environments. This is Amazon going on the offense, and that's what the stock's responding to.
We're less than a week away, you guys know, and everybody knows at this point, from NVIDIA's earnings, right? The 20th. So it's going to be mid next week. Have you all noticed too, Jace, the tremendous outperformance that software stocks have had versus semiconductor stocks since the election? Software, the IGV is up 10.5% since the election. The SMH is up 1%.
Yep.
What's up with that?
Yeah, listen, it could potentially be some of the tariff talks that's been campaigned about and what's going to happen versus targeting tariffs potentially when the administration begins. That's possibly the issue. But when I think about software, and we thought about it early part of the year, we were thinking about CapEx in that area and spending starting to come down and going in other areas, in AI and cybersecurity and other places. But I think it's always been the second derivative play, and I think you're starting to see that ring true, where you're starting to see use cases in the ServiceNows and other software businesses. So I continue to like software as an opportunity going into 25.
So you're in ServiceNow, as you said, Intuit, Oracle, Palo Alto. Obviously, I'm not talking about the hyperscaling mega cap names. I'm talking like a little bit away from that. But again, Palo Alto, Oracle, ServiceNow, Intuit, CrowdStrike, Samsara, Toast. We talk about those all the time. Jeff DeGraff says rotate out of the semis broadly now. The fact that the semi-ET, the SMH, has given back all of its post-election gains. They're underperforming. What do I do with these?
CrowdStrike's been incredible. That's one of the names I'm in. Another one that we don't talk about that often, Atlassian, the ticker is TEAM. This stock, if you look at a one-year chart, this is a breakout in progress. There are just there's a lot of demand for technology, but there's less demand for semis. I'm talking about stock investors. I think there's some sense that semi trade has already been made, and that it gets a little bit stickier if the anti-China rhetoric starts to ramp up, concerns about Taiwan, on and on and on and on. The software names don't quite have that stigma to them, and so maybe that's the rotation.
We'll keep our eye on that stock too, along with the group. As we said, software stocks have just done quite well, especially relative to chips. Two other movers we need to talk about today. Disney, that's our chart of the day because it's soaring. Best day since February 8th of this year. About $15 billion in market cap. It is leading the Dow today. There's a stock up 7%. You just don't see it move like that. 8th straight positive session. That's been the longest rally since July of 2018. Jim Leventhal, he joins us on the phone because we need his point of view on this. Is this about the guidance and the magnitude and I guess the visibility that they think they have?
Well, I think it is that, Scott. First of all, thank you for having me on, Your Honor. I think this was all around a great quarter. You got a beat, you got a raise. You also got better performance from the experiences, the theme parks, which, if you'll remember, the last couple of quarters, there's been some concern about that undershooting expectations. I've said that I thought that was just a cyclical downturn. That appears to be the case. They are predicting growth there, growth that's higher than expectation. And by the way, earnings per share growth for the next 3 years is looking higher than expectations. You know, finally, the streaming business came in much better than expectations. That's a high margin business. There is a lot to like about this report. I think it's going higher from here. The swoon in the spring and summer was on that theme parks disappointment, which is looking like it's going to be rapidly in the rearview mirror.
They don't just generally have the ability or maybe the desire to try and give guidance for that far out. But that seems to be one of the thoughts today, that they feel comfortable enough to do that, and it's being deemed good enough that's why the stock is up to the degree it is.
Yeah, it's a little bold, honestly. I mean, they're putting out quasi-quantitative numbers of single-digit growth this year and then double-digit growth in earnings per share the 2 years after that. That's a long time out there to predict. Obviously, they feel confident in it, and that's, double-digit earnings per share growth is not priced into the stock, in my opinion, at this multiple. Now, I say this multiple, it's around 21 times this year's earnings, but estimates are certainly going up. Mm-hmm. So I really think you're getting it at the right price here for those growth rates. Even after the rally you've had, I think you should be buying it here.
Hey, Jimmy, the big thing to me, the big positive to me was the reversal of fortunes in the direct-to-consumer segment, the streaming business. So we were hearing everywhere last year, streaming's a bad business, it's a bad business. But turns out it's not so bad when you have some consolidation and you have some companies basically give up. And Disney was never going to be one of those companies. They stuck it out. They rationalized costs. $321 million in operating income for this segment in the quarter versus a loss of $400 million in the same quarter last year. I think we're out of the woods on streaming profitability. We heard good things actually on profitability even from Warner Brothers. What do you think, and what are the ramifications going forward for this stock?
Yeah, look, I've been talking about streaming for quite some time, and Josh, I think they are out of the woods. So it's not just that they turned profitable earlier and with greater size than expectations. It's that the expectations for next year and the years thereafter in terms of the estimates are simply too low for streaming.
Yeah, still low.
You have to understand something, and I know you do. I'm just saying in general, you have to understand this is a high incremental margin business. All right, the streaming operations don't work any harder. It doesn't cost them more as they add 4 million subscribers, and they did add subscribers this quarter, which is good as well. So, they're seeing a lot of uptick from the ad-supported tiers. Those incremental margins are tremendous. That's what I love about this business.
Well, the executives are pretty positive. They're talking, quote, a significant growth area continues to be streaming, they say. Let me get you quickly on Cisco because it's not positive. The stock, I think, is still lower. Fourth straight quarter of declining revenues. It's up 4% since the election, but we're given 2.5 back today. What do we think?
This is a great report. Listen, you are factually correct that revenues were down. You have to understand, as many people in the stock do, that last year there was just this gorge of networking equipment orders. That has been digested. That was a symbol of customers trying to get ahead of supply chain disruptions, which, by the way, have eased. Right now, the growth picture looks great. I think what you're seeing in terms of it being down today, Scott, is simply profit taking. It's up 30% over the last 3 months. The multiple here, you got to understand, this is going to be another company where the estimates are going to go higher. There's no way they don't go higher on this report, which is the third excellent report in a row. And what I think Chuck Robbins and the management team is doing is, yes, they raised guidance, but not by as much as some people wanted. That's smart. That is very smart, okay? They don't want to get ahead of their skis. They don't want the analyst community to get ahead of their skis, and then there's a disappointing quarter and they get punched in the nose. So they're setting reasonable expectations that can easily be beat going forward.
Right.
Yep. And they're buying back shares, paying down debt, good dividend. This was an excellent report.
Good stuff. I got to bounce. Jimmy, thanks for calling in. Appreciate your voice on two important stock sports today. Jim Leventhal coming up. The Bitcoin bonanza. Weiss getting in on the action. He has two new moves to tell you about today. We'll break down the trades ahead. First, though, we do have our calls of the day as well. We're back in just 2 minutes. All right, let's do some calls today from the street. Live Nation. The target bumps to 149 from 125 buy at B of A. They say an attractive opportunity to own a growth-oriented live entertainment company benefiting from favorable trends. Josh Brown owns that stock. What do you think?
Yeah, look, I think they've made it pretty clear that their strategy going forward is to, in addition to managing venues, to build some of their own for specific events. It's a lot of CapEx, but it appears that people like it. And this stock is now making another record high this year. So I remain long, and I hope that price target plays out.
All right. Netflix, top pick, $8.50. JP Morgan, new record high today. Jason Snipe, you take that one, please.
Trading at all-time highs, Scott. I mean, it's up 71% year to date. I think this is one of those companies that finally of the streamers, has a luxury of really focusing on profitability. EPS growth is at 45%, revenue growth at 15%. And again, their foray into live sports is the major catalyst for them going forward. We'll all be watching the Logan Tyson fight on Friday.
Okay. Costco, buy, top pick at Cowen. Jason, you got that too. It's at 54 times earnings.
54 times
All
earnings,
right.
It's expensive, but I think it's expensive for a reason. I mean, they're an earnings juggernaut. They've managed inflationary pressures very well through the pandemic. You know, I think they have a very strong consumer base, and when I think about their client and how they're kind of managing expenses and they're value conscious, I think Costco continues to be the right play here. And also, they finally raised prices some, so I think that's also good.
All right. UBS taking down their oil price forecast. They say they're still constructive. You own Baker Hughes, which is your recent buy. You've had the IEO for a while. What do we think about this trade here?
Yeah, so Baker Hughes, I initially got into the trade on technicals, and I'm not very big into oil stocks in general. I keep the IEO on because there's really no other way to hedge geopolitics other than having some exposure to oil equities in your portfolio. But BKR looks outstanding right now. The breakout happened. Now it's consolidating those gains. I think this stock is probably perfectly positioned for deregulation in the energy sector and drill baby drill. So I like it. I'm sticking with it.
All right. Let's we got some stocks that are moving on some interesting news coming out of the Trump transition team, if you want, according to Reuters. Let's put up shares of Rivian intraday, because the stock's down 7.5%. We're going to cycle through some of these EV names for you, because Reuters is reporting today that the president-elect's transition team is planning to kill the $7,500 consumer tax credit for EV purchases. You already know what's been taking place with EV demand, obviously, which has slowed. Now, Tesla's down on this news too, but the thought is that Elon Musk supports this move. Yes, it may hurt Tesla's sales in the near term, but if it hurts his competitors worse, so be it, according to him, probably, right? NIO's down a lot. Phil LeBeau joins us on the phone now, because this is a really interesting development, Phil, that I'm not so sure is a big surprise to anybody. But if there's anybody who can put perspective into this kind of news, it's you. So what do you make of it as we watch these stocks sell off on that headline?
I think the most important thing for Tesla, because they are the king of the hill when it comes to electric vehicles in the U.S., two things. One, they have the most affordably priced models in terms of the Model 3 and the Model Y, that if you don't have a $7,500 discount, yes, there are some other models that are comparably priced, but generally speaking, those are the two big sellers. You can still find buyers at the price point where both of those are at, even without the $7,500 federal tax credit. So while it may impact sales to an extent, it won't have a huge impact as it will with other EV companies that have higher priced models, a smaller portfolio of models available, and who really have used the $7,500 federal tax credit to increase their sales. So that's why you're not seeing as big a reaction with Tesla shares as you may with some of the other automakers. And the second thing to keep in mind, Scott, is that for Elon Musk and Tesla, while selling electric vehicles will always be an important part of the company, the big pivot has begun. it's towards robo-taxis. And what's far more important in their future and in where the stock goes is what may or may not happen when it comes to regulation of or development of robo-taxis. And that's why any headline with regard to that and the Trump administration blessing the development of robo-taxis, et cetera, that's going to move the stock far more than the federal EV tax credit.
What's the impact, Phil, on General Motors, for example?
Well, there will be some. There's no doubt about that. I mean, look, it becomes much more difficult to sell an electric vehicle when you can't offer customers at a dealership $7,500 tax credit that they right now can take right off the price in a showroom. It used to be you had to wait until you filed your federal tax returns, and a lot of people complained, I don't really notice it. It's the month-to-month payment that drives the sale of a vehicle, which you get now with the $7,500 federal tax credit. If that goes away, it becomes more difficult. Having said that, General Motors is making serious progress in terms of rolling out more affordably priced models. And so the question becomes, how much does this slow down that transition, the demand that is there in the market that they are expecting to be there as you go into 25 and 26?
Yeah, I mean, this feels very much like, Musk being sort of willing to lose the battle, if you will, but to win the war in the big picture. That he's willing to sacrifice sales in the near term by being in favor of something like this, which Tesla executives are said to have been in favor of it. If he knows he's going to win the big long game, right, against these other competitors who are not nearly as big in terms of market share like a Rivian, for example, but certainly have big aspirations.
Yes, 100%. And the big long game, Scott, I'm going to come back to it again. It's robo-taxi development. That is really where Elon Musk and his leadership team believe that Tesla really has the brightest future in terms of potential for profitability. And it may not happen as quickly as many people are hoping it will happen if you're a Tesla investor. But if he can get the Trump administration to work with them in terms of clearing some of the regulatory hurdles that are out there, that could have far greater impact than the annual sales of electric vehicles.
Yeah, good perspective. Phil, thank you. That's Phil LeBeau on the beat, as always.
It's worth noting, there's an income cap on whether or not you even get the $7,500. If you make more than $150,000 in gross income, you don't get it anyway. How many people buying Cybertrucks do you think are applying for tax credits? Zero?
Or Rivians.
Yeah, right. If you're buying a Rivian, you're probably not buying it, oh, cool, I get $7,000 back from the government. That's one. Two, what is more likely to be hurt by this going away? I would argue the Chevy Blazer EV. I would argue the Chevy Equinox, the Ford 150 Lightning, what else? Honda Prologue. Absent the 7,500, who gets hurt more? A Tesla Model Y, which is almost like a standard purchase, or something like that nobody really wants anyway. So I don't think this is a killer for Tesla stock. I'd be much more worried about it if I were long Rivian or NIO.
Well, I mean, look, Tesla's up, like 40% since Election Day for obvious reasons. Reuters reporting that representatives of Tesla told the transition committee they support the move, according to sources that they had spoken with.
Yeah, just one word in robo-taxis. The economics for that have not been settled. When you're a driver, an Uber driver or Lyft driver, they're paying for the maintenance, they're paying for the gas, they're paying for the insurance. One of the reasons why Waymo has been such a big drag is that the company has to pay for all of that. So they're charging the same fees as Uber drivers. So that economic, validation is not there yet. And that's going to take a while to get there.
All right, so let's do this. Let's take a quick break. When we come back, we'll follow these stocks, obviously. We're going to talk about this Bitcoin bonanza post-election. Weiss has a couple moves to document. We're also going to have a special report on what Wall Street's thinking about and what they're doing about this bonanza and the boom and how they're going to meet this demand. We'll do it next. Silvana Hanau. How about Bitcoin? Record high yesterday, 93,000. Falling back a little bit today, 89. It's still up tremendously since the election. Steve Weiss, we said, as we teased it, has a couple of moves. What are they?
So I bought Bitcoin again.
Okay.
I originally bought it 28, sold in the 60s, got out, was happy with the gain, and I also bought the Grayscale Bitcoin Trust. And the reason is I'm still not a believer in it as a currency, but it doesn't matter what I believe at this point, okay? It's what the administration believes.
Right.
And so that will keep the momentum going. And if they do put it in as a reserve currency, well, the scarcity will just drive it incrementally higher.
Why'd you buy the Grayscale Bitcoin Trust also? Just piling on here or what?
It was in a different account, so it was for other purposes.
Okay. Okay. Well,
And the correlations went to one over any period of time.
That's why I asked you just why you diversified it away from the coin itself, I guess. The big question though is what Wall Street's doing to meet this new booming demand. You already know about the ETF products that are out there. Maybe others are coming. Mackenzie Sigalos is here at Post 9 following this boom that it's been a bonanza, right? I mean, there's no other way to really characterize it. I want to know though, what's going to happen next? As a result of this.
I mean, even with Bitcoin down, you saw crypto's market cap hitting a record $3.2 trillion. As SEC Chair Gary Gensler gives what amounts to a farewell speech this morning. Now, he didn't say that he's resigning, but already we are seeing signs that a promise of turnover at the commission is opening new lanes for Wall Street to capitalize on the resurgence in crypto. Now, first thing is greater access to altcoins. Bitcoin may be grabbing the spotlight, but these smaller cap tokens have had the greatest gains since the election. Robinhood just announcing that it's relisting coins like XRP and Solana that were taken off the exchange last year as the SEC stepped up its crackdown. Now, there are also new crypto-aligned companies coming to market. The SEC clearing a Japanese crypto exchange called CoinCheck to list on the NASDAQ via SPAC next month. It's the second pure-play digital asset trading platform to go public after Coinbase. And finally, we're seeing new products in the pipeline with the SEC recently granting accelerated approval to 11 exchange-traded funds to list and trade options tied to spot Bitcoin prices on the NYSE, which gives traders another way to speculate on price moves and hedge their exposure, Scott.
What do you think about this, Josh? New exchanges, new products, new ETFs, and who knows what because of this renewed optimism about Bitcoin and crypto in general.
So in the early 1980s, there was a famous newspaper article that makes the rounds every now and again, where the Massachusetts state securities regulators ban the Apple Inc. IPO for Massachusetts residents. So if you lived in Boston, you couldn't participate in the Apple IPO. Part of me feels like there's an alternative universe where in 2020 and 2021, rather than fight so hard against banning these ETFs, somebody would have said, you know what, actually, this will probably make crypto safer, more institutional, more transparent, more liquid. Maybe ETFs will protect people more so than banning ETFs and having people be on all these insane exchanges doing business with God knows who from another continent. We didn't go that way. We went the way where we fought it. Finally, we got it, and now it's mainstream. And I think as you see the price cross 100,000, you're probably going to see a scramble. Anyone that was underweighted, against it, fought it, they're going to have an answer for their clients. You're either in business to serve clients or you're not. So this is the phase we're headed into. It's exciting. It's interesting. I'm here for it. I'm making popcorn.
Even, Mackenzie, if we can sit here and debate like Steve Weiss suggested, even as he buys it, still trying to figure out in his own mind, and many investors are out there thinking the same thing, the real use case is what?
The use case is this. I'm sorry to step on your toes. This is the use case. It's people putting money into it, pulling money out of it, using it to buy other coins. That's it.
I think that's being very liberal with the term use case. But there is no use case. It's a trading instrument. It's where you can make money. It's where you can lose money.
I mean, to that point, I mean, post-Trump, when there's a lot of enthusiasm around the idea that banks will now be able to both custody and collateralize Bitcoin, and suddenly Bitcoin as an asset class opens up to the $200 trillion in institutional funds that exist out there, could flow into crypto, and even a fractional allocation of 1% to Bitcoin because of its finite supply could really be a huge tailwind to price.
And that's the issue. The finite supply is always going to keep the volatility there, which will prevent it from being currency.
Mackenzie, thank you. A lot of news this show, and we do have more right now regarding Microsoft. The stock is taking a turn lower. It's down by about 0.5% on news from the FT that the Federal Trade Commission is preparing to launch an investigation into anti-competitive practices at Microsoft's cloud business. This would be obviously, Lina Khan. Maybe one last big act before the Trump administration gets in place in mid-January. This would be an examination around Microsoft abusing its power in productivity software. That's according to this report. You said you saw Alphabet shares maybe a little lower on this. Someone
I
say
said
that,
that,
but
yeah.
you know we're watching this. That's what this really would be. I mean, it's expected that Lena Khan's not going to be staying within the new administration. I think that's a fair bet.
I don't think that's a fair bet.
Yeah?
I don't
think
know. J.D. Vance came
I know people are saying
but
that.
I think she's gone. I think she's gone from the administration, but I'm not so sure because of the populist message that it doesn't proceed to go after these large companies. Don't forget, that they've not been known to be on the Trump bandwagon, particularly Meta. So everything's fair game in the new administration.
I agree with you. Do you really think Elon wants the pressure off Mark Zuckerberg?
Not at all.
Does anyone think that? So it might be that somebody whispers in Trump's ear and says, actually, the people that run the hyperscalers are the only people maybe more powerful than you, and maybe it's great for there to be an enemy of theirs continuing to keep the pressure on them. So
I said that last week. It's an ego thing. That he can bring the biggest companies, most important companies in the world to their knees, that just makes him feel better.
Yeah, of course. The other side of that is that he has enough people, the president-elect, in his ear who are thinking bigger about economic growth, the return of deal-making, and what that would unleash on an economy that's all but been locked up by that. The economy's
Well, what
done
would it do
well,
to the market?
but you haven't been able to.
These are trillion-dollar companies. They have not been hurt by lack of productivity.
I'm not talking about. I am not talking about big tech. I'm talking about a broader economy where there's a lot of optimism about deals being made. The people who have been around the president-elect during his campaign, Lutnick, obviously, and others, from John Paulson, from the Wall Street community, who are talking a lot about this renewed optimism about deals, if not animal spirits. I think people would be surprised, let's just say that, if Lena Khan was still in that role under President Trump.
She's not going to be. But look, here's the thing. What's going to keep these companies safe is that they're such a big part of the S&P, of the market, that you take them apart, you kill them, the market goes down.
Steve Kovac is with us now. Is he on camera or is he on the phone? I'm not sure.
I'm on camera.
What do you think about? Okay, thanks. Good to see you, man. What do you think about this?
Yeah, this is going after their bread and butter right now. This is the Azure cloud business, Scott. This is what everyone has been measured, or investors usually use as the benchmark to measure how well this company is doing. Keep in mind, this is also talking about Office 365. I'm not seeing anything right now in this Financial Times report about artificial intelligence. Keep in mind that Copilot product that they've been trying to sell through the same product is a separate thing. In the past, especially in Europe, they've been hit with these antitrust inquiries because of the way they bundle certain products. They got in trouble in Europe, for example, for bundling the Teams video product with with the rest of the suite. We haven't seen them bundle that together with Copilot. So in a way, that's kind of good news that it doesn't sound like they're throwing that in there, though we do also know they're investigating the relationship between OpenAI and those investments as well. But this seems to be just on Azure and keeping that data when a customer signs up for Office 365. That means all the Outlook and Word apps that you and I use every day, Scott. That means also letting customers, it seems the FTC wants to say, well, if you don't want to store everything in the Microsoft cloud, there should be some competitive pricing going on if you want to go to Amazon or Google or something like that. That seems to be the thesis here, Scott.
All right. I appreciate you, Steve. Thanks for helping us keep the ball in the air on this developing story. We watched the stock down. You got a last quick thought?
The last quick thought on defense. Look at defense stocks. They are getting crushed today. They're down 3 to 7% across the board. Okay. So something's brewing.
All right. What's your final trade? Weiss, what's your final trade?
Bitcoin.
Okay. Jay.
At V.
Downtown Josh Brown.
Baker Hughes.
All right. I'll see you on Closing Bell. Remember, Fed Chair Powell speaking live. We'll take it. The exchange is now.